recording button. We are recording. Excellent. Thank you so much for everyone joining me today. I am so excited to be sharing this journey with you. I am Sensei Kevlar, and I will be your sensei for the rest of this journey as long as you choose to spend it with me. I am a successful trader. I've been profitable for the past 20 years. I've been a successful trader for 10 years. I've been a trader for 20. The first 10 years of my life were spent doing emotional trading and being very lucky some years and very unlucky other years. And it wasn't until I met my mentor that I learned how to trade professionally and apply discipline to my skills and develop strategies that keep me profitable no matter what. And so that's what we're going to start with. We're going to start with the mindset of a profitable trader. The mindset of a profitable trader is you don't lose money. It's really that simple. The problem is that in a market like this, it's pretty obvious how you could lose money. So the important thing to realize is that it's absolutely critical that we develop a strategy to keep us profitable long term. Now, a lot of people see the bot and they get excited because they see a market like this and the market goes up and the market goes down, and they think, oh, a bot will just trade the hell out of this and then I'll be profitable. I'm sorry, that's just not the reality. The reality of the situation is that automation is a very, very, very important and critical tool in a profitable trader's plan. But it is just that. It is a tool, and you still need a plan to be profitable. And so that's what I'm here to teach you. I'm here to teach you how to be profitable, by making a plan for profitability. And it's a long-term strategy. It is something that you have to spend time with, and it's something that you have to put effort into learning and get, in order to get the rewards back out of it. It's one of those situations where if you do not, put the time in like an athlete does to a punching bag, you're not going to build the muscle memory. You're not going to build the strength required to actually execute the plan and be profitable with it consistently. Vic, you might need to dial into the audio. Okay, so what that means is that we need to be able to read the market, read the charts, know what it is that the charts are going to be doing, build a strategy for maintaining profitability long term. And once we have that strategy in place, once we have that ability to maintain profitability, then we can look to automation. Then we can look to how we can make our strategy better through automation. Then we can look to how we can make our strategy profitable and spend less time at the computer and more time doing the things that we really enjoy while still maintaining profitability. It's really about that profitability. The bot will not make you profitable, period. That's the end of the story. You must make you profitable. And that's what I'm here to teach you how to do. And I'm just going to keep saying this because it is so critical. It's a time investment. It's something that you have to put energy into. It's a lifestyle that you have to commit to. It's discipline that you must acquire. And if you aren't serious about that discipline, if you're not serious about acquiring that skill, you're not going to be profitable, especially not with an amazing bot like Gunbot. So the first thing that I want to talk to you about is that mindset. And let me just pull up my docs really quick because I really want to make sure that we really cover this plan in earnest, right? The idea here is that, sorry, I'm just getting messaged. The idea here is that when we plan for profitability, we can make our strategy such that we always remain profitable. And how we do that is we make a strategy that will keep us profitable by ensuring that indicators telling us when we can be profitable. We only enter and trade on markets that indicators can tell us we can be profitable in. So what that looks like is building out a strategy using indicators and then making a case with those indicators. With those indicators, we can say, is this a good market to trade? Is this a good strategy? Will it keep us profitable? And then we can plan for profitability. And the reason that we can do that is we can back test the strategy and we can forward test the strategy. We can go back in time and see, if I had been trading this strategy for the past month, would I have been profitable using this strategy? And once we've really mastered the strategy, we can say, okay, moving forward, if I made this trade today using this strategy, would I be profitable moving forward with this strategy? And if I am, trade the strategy. And if I'm not, don't. Don't trade the strategy. Figure out that you're going to be profitable, plan for profit, then be profitable. And in that order, right? You don't have to spend money to find out that you're not being profitable. That's the really bad way of doing this. The really good way of doing this is to spend the time learning how to be profitable and then putting your money in, right? So what we're really going to be focused on to start with is how to trade. And what this looks like is this really looks like opportunity sizing and reading the indicators and building a case, okay? So that's the first thing I'm going to start with today. And I'm going to start real basic. I'm looking at a chart. This is a chart from TradingView. TradingView is a website that allows you to look at markets, and they have really nice features, really good technical analysis tools. All these tools on the left-hand side that I use for drawing on my charts all the time. I'm going to zoom in on one of these charts, okay? And what we're looking at here is we're looking at a candlestick chart. This happens to be a 30-minute candlestick chart against BTC USD pair. And I'm just going to close Discord here. Sorry, if you want to get in hold of me, then get me on the WebEx chat here. These candles represent 30 minutes of trading within this market, within this BTC USD market on the Bitstamp exchange. And what we're looking at is we're looking at a candle, and what a candle is telling us is within this 30 minutes, this is the range that the trading happened in. The big fat part of the opening on a green candle is where the trading was at the beginning of the 30 minutes. This is the opening price. Now, throughout this 30-minute session right here, the price came down as far as the bottom of this wick right here, and it went up as far as the top of the wick right here before coming back down here and closing out the 30-minute mark, at which point we minted a new candle. So the closing of this candle is also the opening of this candle. And then you can see from here, we really didn't go down any further from this price. We went up, but then we came back down before closing this candle. Now a red candle is the opposite. A red candle, you have the opening above, and then it closed down below. So in this case, we quickly opened, there was a discrepancy where we quickly made some trades and traded this up really fast, and then we opened up here, and then the price came all the way down to here before coming up to here, and then we minted the next candle. Okay, this is how we read a candlestick chart, and what we're looking at is we're looking at the actual patterns in the market. We're looking at what traders are actually doing to this market, and we're trying to discern what decisions they're going to make with regards to this market. And they're going to be doing the same sort of technical analysis that we're doing, and as a result, they're likely to come up with a lot of the same conclusions that we come up with. So let's say that I'm just going to pull up a 240-minute chart. If it actually feels like pulling up here. Let's say for 1 minute that we decide that according to the analysis, the analysis tells us that this is a good place to buy, right? Well, if the analysis tells us that it's a good place to buy, then the analysis should tell other people that it's a good place to buy. And if it tells other people that it's a good place to buy, then they should start buying. And if they start buying, then the price should go up. That's the logic. And this is the basis of what we call Elliot wave theory. The idea is that when the price goes down, people are going to like that price better, and they're going to start buying the market back up. And when the price goes up, they're going to want to take profits. And so they're going to sell, and the price is going to come back down. And so this is what's going to happen in these markets all day long, is professional traders are going to come in here, and they're going to buy the lows and sell the highs. And they're going to make profit all day long using that strategy. Okay. Now, the problem is that sometimes you buy the low, and then it turns into the high, right? Sometimes, though, you buy the low, and then it turns into a low. Here you're losing money, right? You can't be profitable on this stretch right here. You really need it to go up more in order to pass those maker-taker fees. and now you're not profitable anymore. And this is what happens is a lot of people see this, and let me just make this a little bit more real for you. A lot of people say this and they go, I bought here and I've screwed up. I've seriously screwed up, and they lose money and they sell. Right? It happens all the time. This is literally why people are selling down here, is because they're panicking. Okay? Meanwhile, institutional traders are seeing this price and going, what a great price. I think I'll buy. And look at what happens to the price. Okay? So if you're panicking and you're selling down here, what are you doing? You just lost money on this trade right here. Okay? If you're waiting and you're waiting for a signal that tells you that it's okay to buy, you're not buying. You're not buying right here because this hasn't told you to buy. You're buying right here because everybody's going, oh, I love this price. Let me buy it back up. So technical analysis is the art of looking at the chart and predicting from the previous patterns what it will do next. And what this allows us to do is this allows us to plan our trades in such a way that they will be profitable. And then once we have a plan in place for profitability, bringing in automation like Gunbot is obvious, okay? And that's the problem that I think a lot of people run into, is they think that Gunbot is a magic silver bullet. It's not. I'm sorry. I apologize if you got that impression. It's not the one that anybody wanted to give you. It is a tool for traders who know how to trade, and it is a gun, and it is a weapon. And if you don't know how to use a weapon, it will shoot you, right? That's just the reality of the situation. You need to be a master marksman in order to do this. So what we are going to do is we are going to develop a strategy that will keep us profitable long term. And we're going to test that strategy, and we're going to ensure that that strategy keeps us profitable long term. Then we're going to trade that strategy. And that's what I'm here to do over the next course of the month, is teach you that strategy by showing you that how I use that strategy to be profitable over and over and over again. And what I invite you to do is test the strategy yourself. If I tell you to make a trade, make it on paper, write it down. Say, this is the price that I bought in at, and this is the price that I would have sold at, and this is the price I would have gone in again at. And then tomorrow, come back and look at that piece of paper and see, was I profitable? Because if you were, great. Keep doing this. Keep building up that confidence. Build up in that confidence in that strategy. Build up that muscle memory until you can maintain discipline to that strategy. Because if you do, that strategy will keep you profitable long term, and it'll stop you from doing things like buying here and selling here, because that's not the plan. The plan is that we buy low and sell high. The trick is in knowing what the low and the high is, and then in knowing what happens when you're wrong and how to fix that. And that's what I'm going to teach you. So the very first thing that I want to call out to you is that it's really quite easy to know when a market is going to go up or down a lot. The easiest way to know when a market is going to go up or down a lot is when it's done the opposite. Legit, okay? If the market goes up a whole bunch, it comes down again. If it goes up a whole bunch, it comes down again, okay? If it goes up a little bit, it comes down a little bit. This happens. Here it is going up. Here it is coming down. Here it is going up. Can we predict that it's going to? Absolutely, we can predict that it's going to come down, okay? The question is, where to? How much? How can we be profitable on this leg of the trade? How can we know when it's time to enter and exit our positions? So the first thing that we look at when we see something like a chart like this is we see that there's a number of correlated positions within the market. We call these correlated positions resistance and support. So resistance is when the market is going up, people are buying everything, and then the traders go, no, I like this price, I'm going to start selling. Okay, and they sell the market back down. Okay, so this right here is resistance going up, and then we came back down, and then we found more resistance going up. Let me just zoom in on this here. Resistance going up, came back down, resistance going up, came back down, resistance going up. Okay, look at this. You see how these three peaks are correlated. They form a straight line with each other. What I'm going to do is I'm going to come over here to the left-hand side, and I'm going to pick my line tool, which is the left one. I'm going to click on it, and I'm going to pick the horizontal line. Because what this does is this creates a point and then extends a horizontal line to the left and the right of that point. Then what I'm going to do is I'm going to come over here and I'm going to click with that horizontal line on this tool, on this peak right here. And look at what happens. Is it creates a dot right here, and then it shows you where those other places where that resistance was met. It was met here. It was met here. It was tested here. Okay. Here we tried to test it, and then we busted right through it. Okay. This was resistance, and finally we broke through resistance. Okay. So now, coming up again, we have new resistance. Let's mark our new resistance. Again, coming over the line tool, picking the horizontal line, clicking on the top of the peak. That's our new resistance point. Okay. Now, what's interesting is previously this line showed us where our resistance is. Once we broke above that resistance line, coming back down, that suddenly became support. Here, it was support. We came down, and we touched this line and bounced off of it again. Where did we go back to? Almost to the resistance line. Okay, and what happens when it comes up? Well, it comes down. Where to? The support line. And did it break through the support line? Yeah, really briefly, but then it got pushed right back above it. And then it came back down, and it touched the support line again, and it went back up. And it came back down and touched the support line, and it went back up. How far did it go up? Oh, almost to the resistance line. Now, remember that previously this was resistance. Here it became support. Resistance because it's going up and the market turned around. Resistance because it's going up and the market turned around. Support because it's going down and it turned around and the market went up. Support because it went down and then turned around and the market went up. Okay. Here we came up and we tried to test this resistance line again, and we broke through it again. And then what happened? Well, we found a bunch more new resistance points. Okay. Well, where's the next major point of resistance where we took a major move upward before taking a major move downward? It's right here. Okay. Let's find our new resistance line. Now, was this resistance line correlated later in the market? Yeah, right here. Here, it went above the resistance line, and that resistance line became support. Here, it tried to be support, but it failed. And it went under, and it became resistance again. Okay? Now, we have more support lines here, obviously. Let's pick a support line back from this one. We hit this resistance. We came down. We found support, bounced off of it. Let's put that support line right there. Okay? Look at what happened. Here, that line was resistance. We hit that line, and we came back down. And we went flying up again. When we came back down and we came back down to that previous resistance line became support. Here we went up, came down, support. Okay. Here we went up, came down, support. Here we are coming down. Look at this. I didn't even have to, draw this line myself. All I did was put the line here, and then the chart told me where we were going to come down to and stop before pausing. Then we broke through and came back. We tried to go up. We tried to come back down again, right? Pretend we're here in the market, right? We see that this price got rejected. This price did not get liked. We want a better price than this one right here, okay? Came back down, bounced off of our support line, all right? Well, let's pretend we're here in the market, right? Here we have 3 tests of support, okay, and big spikes in volume. See these big spiky lines at the bottom here? This is a case where the market came in and said, hey, I like this price. I'm going to buy up this price. And you can actually see if you take your trend line, again, here's the drawing tool. We're going to choose the trend line. we're going to see that this volume was pretty spiky, right? We had a nice trend line of decreasing volume of people trying to go down, and then it got pushed right back up, okay? So whatever pressure was pushing this down ran out. It ran out. We expended that pressure, then the market was able to go up again, okay? Now, here we are. We're right here on the market, and we've got 1, 2, 3 tests of resistance. Sorry, support. 3 tests of support with a firm rejection of that support line, right, and a better price. Is this a valid buy signal? Yeah, I'd say it is, right? Why? Because this is our opportunity right here. This is the leg of our opportunity. If we bought here, where would we sell? Well, here, obviously, okay? So let's, on paper, pretend that we actually did buy here, okay? Now, can we be profitable on this trade? Yeah, no problem. Absolutely, we can be profitable on this trade. No problem at all. In fact, we can be profitable in this trade in another day or two. It's easy. This is a 30-minute chart right here. So each one of these represents a half an hour of waiting for the opportunity to become profitable. Okay, here we are again. Okay, here we are. And where did it come up to? Let's not get ahead of ourselves. Where did it come up to? Came right up and found the resistance line, bounced off of it. Came right up and found the resistance line, bounced off of it. Okay, where did I get this resistance line from? Well, I got it from over here. This wasn't even me, drawing a line in the future. This was me drawing a line way back on the 13th of this month, towards the second week of this month. Okay, and yet this line told me exactly what the market was going to do next. It told me that if we bounce off this line and we need to make a leg upward, then this is where we're going to stop again. And it tells me this over and over and over and over again. And this is back testing. This is going back and looking through your strategy and ensuring that your strategy works over and over and over again. If I had bought this resistance line, or if I had bought this support line, could I sell it at the resistance line? Yes. If I had bought this support line, could I have sold it at the resistance line? Yes. If I had bought this support line, could I have sold it at this resistance line? Yes. Okay. Look at this. We're developing a profitable strategy. And if we had just used this strategy, if we had done nothing but this strategy alone, we would be profitable traders. Period. Right? We could sit here and sell Bitcoin for dollars right here and then buy them back cheaper and then wait. Okay? And then sell Bitcoin for dollars and then buy them back cheaper and then wait. And then sell Bitcoin for dollars and then buy them back cheaper and wait. Sell Bitcoin for dollars, buy them back cheaper. Sell Bitcoin for dollars. Okay? We just made a lot of money on those trades. Okay? But then what happened is we sold Bitcoin for dollars here, because this is the strategy, this is the plan, it's made us profitable over and over again. And then what happened? Bitcoin went up. Well, we can't make money that way if we're selling here and then it's going to go up more. What we need is the opportunity to sell here and sell here and sell here and then buy here and buy here and buy here and buy here. And if it goes up, we sell more. And if it goes up, we sell more. And if it goes up, we sell more. This is about position sizing. When we start out trading, we always talk about a single position. And a single position is always 0.001 Bitcoin. Okay? So if I were to sell right here, I would sell 0.001 Bitcoin. And I would buy it here. If I were to sell, I would sell 0.001 Bitcoin here, and then I'd buy it here. Okay? The reason that we're doing this is multiple, and I really want to stress this. We use small position sizing to ensure that our portfolio doesn't get tied up in any one position. But it's also very much about being wrong. Okay? we're going to be doing this across a number of charts. So we need our portfolio freed up to take advantage, but we also need the ability to be wrong. Let's say that we bought here, right? We sold here and then we bought in back down here, okay? And then the market goes down on us. Well, that position is no longer profitable for us. What we need the ability to do is we need the ability to make that position profitable for us. So what's the best way of doing that? Well, the trick is, let's say that, just pretend these are make-up numbers, right? If this is $20 in the market and this is $10 in the market, and you buy one position here and you buy one position here, well, what's the dollar cost average of your position? It's about $15. It's right here in the middle, okay? So let's assume that you bought here and then you bought here, okay? Your profit line is now right here. This is your profit line. Everything above this is profitable, whereas previously everything above this was profitable, okay? So this is how we can turn a losing trade into a winning trade if and only if the market is going to come back on you, okay? Let me say that again. You don't buy more when the market is going to go down more. That's stupid, right? You buy more when the market is telling you it's about to go up again. That's smart, right? So how much do you buy? Well, you could double up on your position, sure. Or what happens if you triple up on your position? Well, tripling up on your position means that your profit line is now here, okay? And everything above this is profitable, okay? So let's say that we bought here one position. Let's say that we bought here two positions. We're now 3 positions deep and we're profitable. Amazing. We bought here and we're profitable here. That's this mindset of a profitable trader. They're always profitable, no matter what. They don't lose trades. They don't lose money. They make money in the market. And it's just a matter of how often they're going to make that money and how frequently they're going to do it and how many charts they're going to do that on and how many markets they're going to do that across day after day, week after week. Tiny trades building up into larger ones as the positions get larger and pick up steam. And eventually they turn them into profitable positions. Why? Because we don't need it to return all the way to $20. We can make money off of $12.50. If this is, this is 20 and this is 10, this would be $12.50 right here, right? We don't even have to go to 15. We can make it off of 12.50 because we bought one position here and 2 positions here, okay? So this is the mindset of a profitable trader. Is a profitable trader always looks at the market and they always devise a strategy to maintain profitability. And they backtest that strategy, and then they forward test that strategy, and they make sure that that profitability is really there. And it's not until that they actually see that profitability is genuine and real, that's when they put their money into the market for the first time. Okay, this is how pro traders operate, is they figure it out first, and then they make their money second. They don't just put their money in and try and figure it out along the way. So I really do invite you to strategize, paper trade, take these lessons and apply them yourself. So what I invite you to do here is go back into the market, go back in time, erase these things, right? Because we're not up here. We're actually down here, back in time, okay? Find a place where the market came down and touched a bottom 3 times or 2 times or 3 times, then put a line there. And then drag the chart forward. Amazing. Right there. Here, 1, 2, 3 tests, a 4th test, and we broke through. Going back up, almost tried to become resistance before it broke through and became support once again. Train yourself to see these patterns. Train yourself to see these resistances without even drawing the line. The lines are tools to help you visualize, okay? But I'm just going to draw this back in the market. Look at what happens, okay? Did I need to know this line in order at this point in order to tell me that this is where it might have stopped? No. I could have gone way back in time, figured out where the market stopped previously, put a line there. This is where obviously where the bounce occurred, where we found support, turned the market around, and then drag it forward. Okay, sure enough, there it is. Train yourself. Build the muscle memory to see these trends. Build the muscle memory to see, what a profitable strategy looks like, because this is a profitable strategy if the market is going to go up long term. And then we need to figure out, can the market go up long term? Okay, so let's take a look at another signal here based upon trends within the market. Okay, in order to do that, I'm going to pull out to the 4-hour chart. 4-hour chart. I'm going to get rid of these guys. For some reason, my charts just aren't loading this morning. Not quite sure what's happening there. The 4-hour chart, please. Thank you. I don't want you. Okay. I need to figure out how to get rid of this news crapola. Where's the indicator that's giving me all this crap? Thank you. Okay. I'm going to get rid of this guy. I'm going to get rid of our support lines. I'm going to zoom out, pull this in tight. Is there another trend that we can see in here? Yeah, there surely is. Let's use our trend line tool. What we're going to do is we're going to connect the lowest peak to the highest, the lowest valley to the highest valley, and then we're going to extend that into the future. Okay, this is called a trend line. The lowest peak to the highest peak, and extend it into the future. Okay, look at what happened here. Look at every time we tried to bust this trend line. Every time we tried to bust this trend line, the market rejected. Tried to bust the trend line, market rejected. Tried to bust the trend line, market rejected. Tried to bust the trend line, market rejected. Okay? Now, what else is happening in this market? 3 tops. See them? 1, 2, 3. What we have is we have decreasing buying pressure against steady selling pressure. Okay? It used to be that the market was able to buy the market up a whole ton. It was able to buy the market up. It was able to buy the market up. It was able to buy the market up. It bought the market up to here, and it couldn't buy the market up anymore. It bought the market up to here again, and it couldn't buy the market up anymore. It bought the market up to here a 3rd time, and it couldn't buy it up anymore. Okay? What we're seeing is that this buying pressure is dwindling. We're not getting the same amount of buying pressure. Meanwhile, the sell pressure is steady. Okay? So you can think of this like market forces. You can think of this as buyers coming in from the bottom, pushing the bottom up, but they're rapidly losing steam. You can tell that they're rapidly losing steam because the volume has gone way out of Bitcoin recently. We've gone from 2 billion to 1 billion, 2.6 billion to 1 billion in volume over the course of the past 2 weeks. Okay, so this run right here pretty much has had it at this point. We've seen lots and lots of pressure from the buyers, but now what we've seen is we've seen the sellers. The sellers are getting really, really pissed at this level, and they are rejecting this level, and they're saying no higher. Okay, so this is a signal that we can sell. We can go ahead and sell a portion of our portfolio, a small amount of our portfolio here, okay, because we want the ability to buy it back here. Okay, but What's happening is that we have a much more important signal happening. This trend line is telling us that we have a long-term trend that has been respected over and over and over and over again. Okay? Traders are looking at this trend line and they're seeing this trend line get respected over and over and over again. And every time this trend line gets respected, it tells them it's safe to buy. It's safe to buy. It's safe to buy. Trend line got respected, safe to buy. Trend line got respected, safe to buy. Okay? What do you think is going to happen when that trend line isn't respected anymore? What I did is I double-clicked on my line, on my trend line, and I changed the color of it. I think it's going to look more like that, right? I mean, that's probably a little bit more realistic. And the reason that I say that is because I know these markets. I know that as soon as, traders get a whiff of a rapidly downturning market, of a long-term trend being broken, they're all about forming that new trend, okay? And what does that new trend look like? Well, it's going to look like that, of course, okay? So when the market is going up, can we be buying and selling? Yeah, absolutely. When the market is going down, we need to be selling more than we're buying, okay? So when this trend line breaks, we really want to stop buying at that point. We really want to be selling. We want to be selling, and we want to be selling, and we want to be selling, and we want to be selling. And the more down it comes, the more we want to sell and sell and sell and sell and sell. Maybe up to 10% of our portfolio even, right? As much as 10% of your Bitcoin could go back into dollar by the time you get down here, right? Why? Because you want the ability to buy it back. If you sold it up here and you bought it back down here, we just made a ton of cash, right? But the only way that that works is if you have the ability to sell a little bit and be wrong. Because what could happen is this. Okay? All of this technical analysis and then news could come and fuck it up. We could sit here and have, Bitcoin get some major new technology, some major partnership with a bank, and then the traders just absolutely blow right through this resistance line, and we're into a whole new trend. Okay? So if we sold 10% of our portfolio up here, we're screwed. Okay? We're basically losing out on all of that motion on 10% of our portfolio. But if we sold a tiny, tiny fraction of our portfolio here, and then it came down a little bit, we could buy a portion of that back. But if it kept coming down, if it really did break the trend line, we could keep selling and selling and selling, and then just wait until we really do see the trend that we're looking for, which is for it to come down. And then after it comes down, what are we looking for? We're looking for support. We're looking for volume. We're looking for volume to say that this downward trend is over. Okay? So we can keep doing this over and over, and it can keep coming down, and we can keep selling and selling. And then as soon as we see a buy signal, well, it's time to buy again. Okay? This is the strategy, is by maintaining profitability, by building a strategy out that has us selling when the market is going down, only to buy back at the bottom when we realize that the trend has reversed itself, we can always be profitable. The only way that we cannot be profitable is if we use too large a position size. If we use too large a position size, if we sell 100% of our Bitcoins up here, and then it goes up, well, we're done, okay? But if we sell a tiny fraction of our Bitcoins here, and then it goes up, well, we can sell our Bitcoins. 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 We can sell up to 10% of our portfolio. Why? Because as soon as we get to 10% of our portfolio, what's it going to do? Every single time it goes up, it comes down again. Every single bit that we have sold in our portfolio, we can buy back at a cheaper price on the leg back down. Okay? This is the profitable way. This is the mindset of a profitable trader. This is the way in which you maintain profitability long term. And I really want to stress this. This is not a get-rich-quick scheme. This is a make you a millionaire in the next few months scheme. Okay? But it requires discipline. It requires you to actually commit the time to learning how to do this and committing to do this with very, very, very small position sizes, even if you're working with a very large portfolio. I promise you that no professional trader sees this and commits 100% of their portfolio. Doesn't happen. Ever, 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 ever. Okay? They see this and they commit 0.1% of their portfolio. And then they make money off of it and they sell a portion of that. Then they buy it back down here. And they sell it off when it gets to here. Then they buy it back down here and they sell it off to here. Okay? And when the market is going sideways, you're trying for 50-50. You're trying for 50% cash, 50% Bitcoin. And when the market is going up, you're trying for 60% Bitcoin and 40% cash. And when the market is going down, you're trying for 60% cash and 40% Bitcoin. And you're just shifting those positions around to take advantage of those motions and moving your positions in and out in order to take advantage of those motions while maintaining the ability to continue to take advantage of more legs, more profitability, even on small motions or large motions. Doesn't matter. We can make money any way the market goes if we use correct position sizing. Because if we commit $4 here and then it plummets, we can commit $8 here and $16 here and $32 here and $64 here, and pretty soon, we're at a couple $100. Okay, well, let's say you've only got a $1,000 portfolio. Well, how do you double up down here? You can't. You're done. You just lost a ton of money. But if you have, a $1,000 portfolio and you start with 50 cents, well, you're in good shape by the time you get here because you're only $15 deep. And then you can turn that $15 into 100. $15 into 100. All day long, every day. Yesterday, I announced, or 2 days ago, I announced a trade on Ripple. Those who took the trade made 20% in 2 days on their position. They did so by doubling up where I told them to. Okay? They didn't put their whole portfolio in when I told them to buy. They put a tiny fraction of their portfolio in, and then when it went down again, they doubled up. And they made money on this leg right here. Okay? This is the mindset of a profitable trader. And I really do want to stress this. Automation is a tool, and the gun is only as useful and as powerful and as potent and as accurate as the person who is shooting the device. So at this point, I am going to open up the room for questions, comments, screams of agony. Please post them into the WebEx chat. I'm not paying attention to the Discord, so I had to close it because it was beeping in my ear. But if you have any questions, please ask them now. I'd love to hear from you. I'd love to hear any comments, any questions, anything that you're not clear on that I've talked about so far. Let's pull up the chat here. And of course, if you don't have any questions at this very moment, I will just talk to you about the strategy moving forward. What I want you to do is I want you to take what I just taught you and go back and look at charts and find support and resistance, and find where that support and resistance was correlated in the market again at a later date, and then find where that support became resistance and where that resistance became support, and convince yourself that this is real. Convince yourself that this matters. Convince yourself that this really is a way to be profitable, and this is really where the market will turn around, and this is really where the traders are looking at to see their opening and closing positions, right? This is the way of the trader, is they pay attention to their profitability, they pay attention to their strategy, they plan their trade, then they trade their plan. And I'm going to say that over and over and over again. Plan the trade, trade the plan. The minute that you deviate from this strategy, the minute that you see that the market is going down and you panic and you sell instead of buying down here, that's the minute you lose money. The minute that you bought up here and then you sold down here instead of doubling up because you didn't use correct position sizing, which made doubling up trivial. You spend $1 here, so it's easy to spend $2 more here and make it $3. Okay, that's tripling up, right? or quadrupling up. You spent $1 here, you're going to spend $4 down here. Well, how are you going to do that if your portfolio? You can do that if your portfolio is only $1,000, right? But if you're thinking, oh, I see Sensei says, sell here and it's going to come down here, I'm going to commit half my portfolio, you're screwed. You are absolutely out of luck, because what could happen is this. Okay? Develop a profitable mindset. Focus on long-term longevity. Focus on small wins that will make you rich if you do them over and over and over and over again. Develop your strategy. Test it. See that you're profitable. Make sure that what you are doing really will make you profitable. Trade the plan the trade, and then trade the plan. So tonight at 9 o'clock, I'm going to be marking up some more charts and trying to find some more opportunities. And I hope that tonight at 9, it's 12:46 right now. I hope tonight at 9 you will join me again to do some more workflow on some more charts. And if you have any questions at all, of course, I will be in the Discord to answer all of them. I'll be talking more about this in the Discord. And then on Wednesday, we're going to bring in some more indicators. And of course, in between now and Wednesday, we'll have plenty of time to talk about these indicators and others like them. But on Wednesday, we're going to bring in more indicators, and we're going to see how those indicators work. And we're going to see how what those indicators tell us, and how we can build more information about what the market is doing and build more strategies to keep us profitable long term using those indicators. I haven't gotten, which indicators will I be bringing in? All of them. Literally, okay? I'm going to start by describing classes of indicators. I'm going to start by describing predictive versus lagging indicators. And what this is talking about is a predictive indicator can tell you what has happened in the future, but a lagging indicator will only tell you what has happened in the past. And combining the two, what has happened in the past with what will happen in the future, predictive and lagging, is how we know, first of all, with the lagging, when the market is ready for us, and predictive, where the market will go next. Okay. Some of my personal favorites are the Relative Strength Index, the RSI, the Moving Average Convergence Divergence, the MACD, the Williams Volume Acceleration, Momentum Indicators, the Fibonacci Sequence, Fibonacci Retracements, Cipher Patterns, ABCDs, Triangle Patterns, basically everything under the book. At some point, we're going to bring them on. We're going to find a chart, and we're going to make use of them, but we're going to break them down first. Okay? We're not just going to pull up the RSI and go, oh, look, RSI high, sell, RSI low, buy. No, we're going to actually go into the formula used to compute the RSI. We're going to break it down and see, what is this actually telling us? What is the relationship that we are measuring? What is the formula that we're putting those relationships into? And then what is this reading? What is this indicator actually telling me based upon that math? Why does this math make any sense at all? What is it really, really, really doing? We're going to break it down, and we're going to go over the formulas. And then once we have a fundamental understanding of how those formulas work, what those formulas are really telling us, that's when we're going to pull up the RSI on here, and we're going to know. We're going to know what the RSI is saying. It's not just saying overbought or oversold. It's actually saying something much, much, much more in-depth than that. And knowing what that is critical. It's absolutely critical. You can't use an indicator if you don't know the intent of the indicator. You don't know how the indicator actually tells you what it is that it's telling you. So the RSI and the MACD are the two most obvious ones, the exponential moving average, the EMA, the sort of the three most obvious ones. They're in Gunbot for sure. They're obvious ones. The MACD and the EMA and all those. So these are really, really classic ones that it's really important to understand. The Fibonacci retracement is a really, really powerful tool that can absolutely tell you where, what another leg of something is can do, right? Here we have an example of a Fibonacci retracement, and it's telling me where the next resistance line will be, okay? All I did was I drew a Fibonacci retracement from this leg to this leg down to this leg. If this is the only information that I knew, is this leg right here, okay? And then I just extended that out into the future because it's a predictive indicator, okay? What this would tell me is this leg and this leg is then this leg and this leg right here 100%, okay? What this is telling me is if this motion happened again, starting from this leg right here, it would end at this line right here. Sure enough, it did. Predictive indicators. Okay, this told me, based upon information that I knew from the past, say that these lines hadn't been drawn yet, right? Say we're here in the market, and I just draw this right here, and then I drag it forward. Well, where can I profit target? 100% of the motion again. That's a predictive indicator. So I will go very much into depth about why this is the case, why these things work, what it is we're really looking at. Because that's the thing, right? If you just take these tools and you draw it and then you go, okay, I think it tells me it's going to go here, well, that's not really useful, right? What you need to know is you need to know why it's going to go here. What is this telling you? Why did we stop here and here? Why are these lines relevant? Why were we able to predict these lines with consistency, right? Why did it know that this line was going to happen again? Look at this. Even it continues to predict, right? This line right here, sure enough, if all I had done was drawn this indicator back here on, what is this, the 716, 720 leg, the 716, 720 leg to the 724 fall, if that's all I had done, I could have predicted this. I could have predicted this. Absolutely. Why? My indicator told me these numbers are correlated. These numbers are correlated. It would have, this is an obvious number. We can use a different indicator for this one here. Green line, trend line. Market came up, resistance, turned around. Market came up, resistance, turned around, right? So if I was here, could I have known that I could have been profitable right here? Yeah, of course. Resistance line. No problem. Okay. Any other questions? Okay. In that case, I am going to close this out for the day, and I hope you all will continue to stick with this and remain profitable long term. It is a long-term strategy, and I promise you, if you stick with it, if you really do learn to trade like the pros, you really can become rich like the pros do. There really is a whole shit ton of market money to be made in this market. You really can quit your job in 6 months. But until then, you got to keep your day job. You have to. You're not going to get rich quick. You're not going to do this if you don't devote time to it, if you don't take it seriously. And during that time, you must pay the bills. You cannot rely on this to be profitable. You cannot rely on this to make you money. You cannot rely on this to quit your job anytime soon. You need to build out strategies that you know you will be profitable with long term, execute on those strategies, and then once you've got $1 million in the bank, yeah, go ahead and quit your job. Fine, no problem. But in the meantime, this is not a get-rich-quick scheme. This is a get-smart scheme. This is a get-intelligent scheme. And the more intelligence and the more smarts, the more time you build to building that muscle memory, the more disciplined you become to planning the trade and then trading the plan, the more profitable you will become long term. Thank you all so much for your time, and I hope to see you all again in this room. Bye.